Welcome to my 10 lessons I've learned from investing in small cap stocks. Lesson number 3, value generation. Now, in my last video, I explained that you increase your chances of finding an outperforming stock by narrowing your research to companies valued at 20 million or less. But just because they're valued below that level, small cap stock or micro cap stock, doesn't mean they'll outperform. Now, the difference between a company that'll outperform and one that won't are the potential of its assets or its products, whatever it's selling, ultimately. Okay. Now, ask yourself this question: next time you're researching a company, okay, just ask yourself, can this be a 10-bagger? By that I mean, can the assets it's got have the potential to generate value 10 times or in excess of its current valuation? And that will narrow your search down. You'll find it narrowed down again. You're thinking, okay, this company, it's a small cap, it's got revenue, but can it generate 10 times at least value than the current valuation? And there are three sort of sectors predisposed to this kind of aggressive re-rating valuation. And they are as follows. Number one, biotech or pharmaceutical companies. So small biotech companies or pharmaceutical companies, that are addressing a big market size with a new drug that'll cure some kind of disease, or it's a new way of going about curing a disease. That's one sector. Generally, if you have tests that go through clinical trials and they pass some sort of phase 1, phase 2, or phase 3, if they pass that successfully, normally it will fly. The share price will fly. Okay, sector number 2 is tech. When you're a company coming up with a new way of doing things, or it's going to be the next big thing, they can also fly, because sometimes markets can't value them. They have no way of putting they have a potential on those assets. So even though the assets they have are questionable, if the market can't value it, but it's seen as the next sort of big hot thing, then they can fly. And I'll give you an example of that in a bit. And the third sector is resource companies. This can be oil or gas or mineral resource companies, and that's because there's a sort of steep sort of value generation curve that these companies go through. When they first discover these assets or prospects, they're looking at gas or mineral reserves, then they're quite high risk. There's no guarantee they're going to be commercially viable. Then they go into exploration, and then they go into sort of a scoping study maybe, and that de-risks the assets. So essentially, it proves up the value in the ground, the metal in the ground, whatever they got, or the barrels of oil. But you can also, when they go through this sort of value generation curve, so they go through a scoping study. This is where they put the economics around what they've got, what they know they've got. It's the first time the potential of these assets can be seen. Now, if you're keeping an eye on the grade of the drills doing exploration, or the data coming out from, say, 2D or 3D seismic for oil and gas, and you know the kind of prospective resources, then you can sort of extrapolate the potential money that can be earned from these assets, But when the general public find out about this, generally, and normally a bit of a lag, then you can get this aggressive explosion in the share price. So, look for these companies and ask yourself this question: can the asset they've got re-rate them value-wise by 10 times or more what they are currently? And of course, the smaller the market cap, generally, it's easier to generate more value. So, for example, if you've got a 10 million market cap, it'd be a lot easier for a company to be valued 10 times, so 100 million market cap, than it would be for a market cap of 100 million to be valued at $1 billion. That kind of re-rate in valuation is really hard, massive, generation of value. So that's why smaller caps work. And also, don't worry about revenue and profit. A lot of people get hung up on, does this company have revenue or profit? It's a lie. When you look at small cap companies, right, that can be a hindrance, because the share price rise is it's correlated, highly correlated, of course, to the revenue generated in the company. And unless they're generating phenomenal growth in that revenue or profit, then the share price will not re-rate by 10 times. In the absence of revenue or profit, all sort of people have to go on, especially with tech, is hype or hope or potential. With tech, it's hype. I'll give you an example of Vasarian. They're in the graphene space, very hot space. There's so many sectors, so many businesses, so many areas this could benefit from: electric vehicles, smart housing, to airplanes, to sport. Everything can benefit from graphene. We don't know how big that market is. So it is a blue sky stock. Now it's made this big move. It's gone from, I invested in when it was around about sort of 15 million market cap, and it's got up to so 200 million market cap. So it's made its big, fast, easy move. Not to say it won't keep going, but at a slower pace. So you have to get in early, because people can't value the benefits of graphene. They've no upper limit. The sky is the limit there. Now, that's hype. Hope is when you get pharmaceutical drugs, for example, and they come up with a formula or a drug to cure a known disease or a new way of doing it. And that can be massive because, of course, if it's better than the product out there at the moment, which is addressing a big market, then it could be a billion, a blockbuster drug earning $1 billion a year. So that's big as well. And then you've got resource companies, of course, when you can extrapolate what they have in their prospects or their assets and how much that can be generating in future cash flows. All right, so hope, hype, and potential is a lot more powerful than revenue and profits. Like I say, in the absence of revenue and profits, people have hope, hype, potential. And there's nothing as powerful as that to re-rate a share price, because largely it's based in your mind. And your limitations, only limitations you impose on that stock. And so don't worry about revenue and profit. Look for small cap companies with the potential to generate massive value compared to their market cap at the moment. So big assets, big prospects, or big hype and hope potential. Hope that helps. And there'll be another lesson along the. And like I say, I'm just going to reiterate the 3 baggers I've had, the 3 10 baggers I've had, in excess of 10 bags, some of them haven't had revenue. Okay, they've had hope, hype, potential. They've been 2 tech stocks and a resource company. A 6 bagger I had is a biotech company, and they're going through phase 3 trials. No revenue. So if you want to achieve massive re-rates in a share price, don't look at revenue too much. Don't worry about it too much. It's not the most important thing. Okay. All right. My next video will be out very soon. Thank you very much. If you like this, please like, thumbs up, share it if you could with someone. Comment below if you have any questions. I'll try and help you. And by all means, subscribe. Please subscribe. If you like the video, please subscribe. Thank you very much.